Hi, my name's Tom Elliott, Director of Beulah Capital. With me is Beulah's CEO, Christian Ryan, and welcome to the March quarter market update.
Thanks, Tom. Look, I might start with some couple of questions for you today, Tom. Since November, we've had the whole Trump effect across our world markets. I'd like your view just on how you see Trump playing out and what he's up to at the moment.
Well, Donald Trump as president is largely playing out as he was in the run-up to the US presidential election. That is, he can be erratic, he can be forceful in his words, but he is by and large trying to fulfil the promises he made. Now, the stock market have cheered Trump's election. They like a big spending president, which it looks like he's going to be. US interest rates, I think, are rising as a result. The US dollar has certainly been stronger against the A dollar. Foreign policy is an interesting area because Trump is making all sorts of noises about Syria, where he bombed an airfield just a couple of weeks ago, and more recently about North Korea. But having said that, overall, Trump has been, I would say, good for financial markets.
And do you believe his policies are likely to all come to fruition, or do you think that he's going to struggle in a couple of areas?
Oh, Trump will struggle in many areas, there's no doubt about that. But people think the US president is powerful. The reality is he is not, or she is not, if one day we have a female one, because they have to grapple with two houses of Congress and the Supreme Court. Even though the Republicans have the majority in both the Senate and the Congress, over time Trump will run into some problems, and he's already run into problems on healthcare, for example.
Trump's had a massive effect around the world since he was elected back in November. How do you see his policies and what he's up to affecting other places like China, Europe and Japan?
Well, with China, the biggest issue is North Korea. That's a foreign policy issue. I think that'll be sorted out, by the way. I do not believe there is going to be a war over North Korea. That is fanciful. In Europe, well, Trump's election, being an outsider winning the election, has given rise to people who want to leave the EU, and we've got a French election coming up very soon, and there's a very big chance that the EU begins to fall apart. Of course, we've already had Brexit. US interest rates going up is a massive issue. And I think also the fact that he wants to cut corporate taxes in America quite dramatically is going to cause a race to the bottom with tax rates. And indeed here in Australia, we've got an issue where the federal government is also trying to cut corporate taxes, because if you don't, corporations will go and set up somewhere else like America and not here in Australia. Okay, so Christian, over to you. We've just had a big reporting season. How have you seen that?
Well, certainly the Trump side of things has really benefited Australian business, in particular material and mining businesses. For the last 2 or 3 years, they've spent a lot of time cutting out costs, reducing capital expenditures, and as commodity prices have risen back to in the $90 range, there's been strong profits that have certainly flowed through. We're pretty surprised about a couple of things on the Australian economy, and we're actually doing probably better than most people expected. So we've seen the market probably jump the ASX 200 from 5,200 up to about 5,900. So overall, Australian businesses are generally travelling well. There are pockets that we're seeing in companies and industries that are not travelling as well as we'd expected, but certainly banks, material, mining companies, oil and gas business, a greater part of the Australian economy are actually doing okay.
Okay, Christian, so how's Trump and the reporting season, how's it affected our clients' portfolios?
Oh, look, for the last 6 months, we've had a really positive run in terms of from a return perspective, much better than the previous probably 2 years. Although we're now starting to see valuations across a lot of assets, in particular the US, starting to be quite high. But the portfolio certainly has benefit of our continued strategy of moving money, capital overseas. The other probably issue that we're facing or really looking hard at is the fixed income market. As interest rates rise and are continued likely to rise, fixed income bonds start to lose capital. So the fixed interest market is a really difficult market that we need to be, and certainly is something that have focused on a lot in the last 6 months, but also an area that we're not allocating as much capital.
Final thought?
Look, final thought, Tom, for me is an Australian pastime is property and interest rates. There's every day and almost every minute, property is certainly the topic of most people, and it's certainly becoming a big affordability issue in Australia. I suspect that one of the key issues that we are looking at is interest rates in this country and unemployment. I'd say they are the two major factors that sort of keep us awake with such a massive exposure in people's life and wealth. Final thought for you, Tom?
Well, two things. The federal budget's coming up in a few weeks' time, and seriously, if Scott Morrison doesn't get this right, it'll be his last federal budget as Treasurer. There's going to be a lot of impact on property, I believe. They want to try and make property more affordable for first home buyers. Good luck with that. And another one is Telstra. We do have an exposure, a small one, to Telstra shares in our portfolios. Telstra has been whacked a bit recently. I actually think the selling might have been overdone. Having said that, I think it is very, very likely that Telstra will be forced to cut its dividend fairly soon, but I think the market's already priced that in. Anyway, thank you very much for watching, and we'll talk to you again next quarter.